So this is just a quick recording, just about attention to detail really, and how that can save you losing trade. That was like kind of the theme of the last case studies I just did, so I'm still kind of on it. And this is on silver, and mainly this is revolving around when you're trading against the grain, basically the failure of PD arrays, or trading to the last line of defense, or basically going to say the same thing, but it's just the third way of saying it. Trading to last line of defense through PD arrays, unusual context here. So this is the monthly on silver, not hugely relevant. The weekly was looking like this. Obviously there's not really any PD array that's too relevant on the weekly, but you did have this previous week which swept this low here, and then the week before that swept the high, so you've kind of got a sweep on both sides. But the daily's where the bulk of it is, and here on the daily you had come through, made this fair value area when you traded through here, overlapping with a fair value gap as well, so pretty strong overlapping defense. We then proceeded to trade back through it. Now we've not made a fair value gap on the daily, so that is something to note. But we have, we have made a fair value gap on the daily just there. And you had these kind of sweeps. That isn't the best because you've already rejected and come back down and you sort of reject again. Shows a little bit of weakness in the market there, because in an ideal world it would just be a rejection and this candle would continue. So that's something to note. And basically, so you would be looking to trade all the way up to here, because that is the last line of defense on the daily. But when we head on to the 4 hour, what I had last night, where I was considering taking this trade, just use the bar replay just to make it a bit cleaner. I had this, I can read the text, but I had this situation last night where you'd already got a nice rejection from this fair value gap overlapping with the mitigation block. When you just look at it just on its own like that, looks quite nice, and potential entry could be something like that. But it is important to realise that we are trading against the trend, and we bounced off of a fair value gap here and a little order block here. When you're encountering resistance, often fair value gaps and fair value areas, that sort of thing, order blocks, mitigation blocks, breaker blocks, that kind of thing, overlapping with a fair value gap, that is your strongest form of resistance. And then sometimes you get strong highs or strong lows, which is judged by whether you disrespect or you whip the high or the low. But what we had here is the obvious strong resistance. It's a real fair value gap, it's not a breaker, and the order block. And from that, we had a pretty strong rejection here, and then a follow through, right? So that's like classic 2CR rejection, and then it's incoming into this. So whilst there's not a fair value gap made on this side of the market going downwards yet, so a bearish fair value gap, the rejection there is already pretty strong off of this resistance. And then when you take into account that you're trading against the trend, you want things to be picture perfect when either, in my opinion, when you're trading against the trend or you're trading out of a consolidation. You don't want any sort of points of weakness. You want to be sure. And although this candle is a nice rejection, because it's against the trend and it's off strong resistance, I didn't want to make an entry on that. And the next candle was that, which isn't a good next candle. Obviously, you're straight into drawdown. And then I think it sort of continues on, yeah. And although I was also watching at the time, although you failed to create a fair value gap here with these three. I'll get the bar replay back, so I don't really want these. Although you failed to create the fair value gap here, because in an ideal world you would have created some sort of bearish fair value gap here to confirm, yeah, we're definitely going downwards. That would have been the strongest bearish scenario, and that would have immediately told me, don't get involved. But already, I was waiting on this second candle because I wanted to see the follow through. I wanted to see in real time the order flow on the lower time frames, because I don't even have to go into the lower time frames. I see this candle, and if I see an up candle, I know the order flow on the lower time frames here is failing. But we didn't see that. And also, just on top of that, now we've mitigated this resistance, you basically had all of this room to deal with if you're going to continue upwards, since there's no resistance in theory. So there was no rush to get involved here as well, and I think that's what the writing alludes to. Trading against the trend on high time frames, that's why I don't like the big rejection of resistance. Best option, despite a good rejection candle, wait for the second candle to get involved, aka wait for extra confirmation. No resistance above either, so further target is more suiting to the situation here too. Yeah, exactly. So even if you did get a second candle, you're not as limited by this first context high here of the fair value gap. And yeah, that was it really. All in all, it's been a good week, even though I've only traded once. I've avoided some losses which could have easily been taken just because I've paid attention, really. Yeah, that's that.